Hi there, traders. This is Brad Gilbert with today's trading action. It's Friday, the 8th of March. Now, as we head into the Asian session here, now I was saying it yesterday, the dollar index was around sort of 103, sort of 30, a slight little bit of a retracement. Same with euro, but like this announcement from the Fed, right, really kicks into gear everything, right? The markets have been rolling back, the potential for US rate cuts. Now that the Fed chairman is out there saying, we're going to go, he's telling you prepare for it, right? So the dollar, I think this is the next leg of dollar weakness, and it's the start of the new trend, like the cutting rate cycle, right? And it's fresh. So we don't have any sort of major levels here on the dollar index, but as you go through the course of the next couple of days, and I mentioned it yesterday as well, the markets with this sentiment in play are super sensitive, right? They will move on any strength or weakness in the data, right? So if I just bring over the calendar today, so what I'm talking about is now the ECB did signal that they're sort of coming up towards a rate cut, maybe in June, somewhere like that. And we did see, if I just take that calendar down for a sec, you saw a little knee-jerk reaction in the euro, right? And that would have flushed out and hurt some people, but it did hold that support trend line. And then the dollar, the significance of the US dollar sentiment, momentum kicks into gear and it takes everything with it, right? And this goes to show you how oversold the Aussie was and the Kiwi, right? The Kiwi are coming up to nice levels. The Aussies really recovered strongly. So to me, this signals like the next leg of the move, right? Or the next big opportunity. So any sort of strength in the euro numbers today, the euro will start to run further. And I'll show you, I still think dollar Swiss is a better trade. Like Canada, right? The Bank of Canada said they're in no rush to cut rates. So the Canadian dollar is rallying against the US dollar, right? You can see here very clearly. So we've got two things in play here. The dollar CAD is a perfect trade, selling dollars, buying CAD. So once again, if we get strong Canadian employment numbers, it supports the current trend, and that's your friend, right? And obviously, non-farm payrolls, very key to this. If we get weak numbers here, well, the current moves are going to be just kicking into gear across the board. Now, and I'll just focus on the, say, weaker non-farm payrolls, right? If you look at the your daily trend lines, right, have a look at these things. Like sterling is right at a critical level. Most of the other pairs, well, dollar CAD sort of breaking down. Dollar Swiss is just coming back into the groove. But the rest of them, euro, Aussie, Kiwi, I mean, dollar yen to an extent is, and the dollar index are all sort of mid-range, right? So they're sort of ready to go, but not the absolute ideal levels where we're breaking levels, but still trading opportunities. If you come back and have a look at the hourlies where you're going to be sort of triggering some of this stuff, to me, strong in Eurozone employment numbers, dollar Swiss has got a great trend line here to be selling dollars, buying Swiss, right? Swiss in the euro, they're like step brother and sister, you know, that's the way they operate. So to me, that's like a valid opportunity to be looking to trade, right? And I'm getting a little bit pumped because this is the first time we've seen like it's so important you get clarity from the central banks, right? And this does roll through the market. So as we come through today's trading, you know what? You just want to keep an eye on these things. Now, so let me just cover the other side of things. If the non-farm payrolls comes out really strong, right? Well, that's going to sort of really dampen the current move. We might see a bit of retracement. It's not going to change the Fed sentiment, which is a weak dollar at this point, but it will reverse some of the short-term moves. And the same with like the Canadian employment numbers. Like the Fed, I mean, the Bank of Canada says, you know, we're not cutting rates anytime soon. If these numbers by any chance, you know, collapse, well, you're going to see a turnaround in dollar CAD there as well, right? So you got opportunities. The idea is you connect the dots, right? These things are going up. Now, all you have to be assessing is that a good level to get in here or not, right? Like looking at the Aussie at this on face value at this level, you're probably thinking, well, it's come a long way, right? And this is the other thing. So during the Asian sessions, I would expect a few of these things to retrace a little bit, like just come back a touch. And then at the start of the European session, they start to go again. That's how trending markets work. They don't just go up through all three, like the Asian session, the European session, the North American session. There's a pause, bit of a retracement, usually in the Asian session, and that's where the opportunities sort of kick into gear. So just get excited because this, as I said, this is where we know what's going on. We've got the sentiment. We know which part of the market, where the dollar's going. It allows us to attack the market very clearly. Now, as you'd expect, the Fed cutting rates, okay, prices up. That means US Treasury yields down, weaker dollar, right? And you are going to see, I mean, this has just been reset with the change of after 5 p.m. New York, but you're going to see Euro, Sterling, Aussie, Kiwi topside. As I said, maybe the Asian session, it sort of just holds, but equities are up, risk on, dollar off, Bob's your uncle, Fanny's your aunt, right? That's the way we're sort of playing at this stage. I'll be keeping an eye on those Eurozone numbers for sure. Okay, so if I just get those up, drag it across. So just keep an eye on these numbers, right? So, you know, I always value the German numbers over the Eurozone numbers, but you know what? You take with what you got. So industrial production numbers out of Germany, that would be worth having a look at, right? So, and the previous numbers were shocking. So if we get a big rebound there, well, it supports a stronger euro. Obviously, this section here is a dog's breakfast. Dollar CAD and the Canadian employment numbers, US non-farm payrolls, when they come out at the same time, it can be a calamity, right? Dollar CAD can be very awkward to be trading. So either look at the CAD crosses or look at the major pairs. To me, all I'm looking for is out of the non-farm payrolls, if we get weakness here, it's like, you know what, hip, hip, hooray. We've got weakness. It's set in the market. We get one more inflation number out of the States, slightly weaker. The markets will bring forward the rate cuts in the US very quickly, and the dollar will start to really drop across the board, right? Equity markets up, bond yields down, like it's just happy days, right? This is we've been waiting for this part of the cycle, right? For months. You get to the end of the hiking cycle, the data starts to come off. We sit here, the banks to and fro about what they're going to do. Then all of a sudden they go, you know what? It's time to go. That's the start of the downtrend. It happened yesterday. It's been followed up today. We just need the data to fit in with what's happening and you make money. Simple as that. All right, guys, that's it from me. Pretty excited about what's happening. So anyway, keep it together. Don't put all your eggs in one basket. Trade every opportunity on its own merits and try and build capital. Good luck, guys. All the best. Cheerio.